All right, so let's get into the daily recap today. A beautiful day to trade. There was nice setups in both directions and on plenty of different assets as well. So let's take a look at the two trades that I took today. One was on oil, which is what we're on now. And the reason why I was looking at oil is because I did take a short for PPI news. It was a very nice short setup with the indicators, so I took that, and then I didn't necessarily need to take the long back up, but it was a nice long setup, and I didn't really trust the move back up initially. And by the time you can see that it was pumping, I figured let me go ahead and take a look at oil, see what it's doing, and it was setting up beautifully. So let's take a look at this. So we have a nice huge accumulation range on oil, right, leading from yesterday, and we can see that the first 8-hour block, London broke out of that, right? And then we can see for the next 8-hour block it ran bullish, right? So if it comes back in the range and gets back under previous day high, we know that it's a bearish 8-hour candle, and we have our indicator zone right here where we look for bearish rejections. And we know that if it rejects here, the first stop is the hold flip zone, which is these three lines here. And if it does break through that, then the last stop would be this level here. And we have a bunch of liquidity. So all this is engineered liquidity. So we know a move down will likely swipe all of that out. Now, I wouldn't necessarily target low of day. I mean, you can, and it may get there, right? But for the sake of taking a trade with reasonable expectations, this is the liquidity that I was eyeing and looking at, and that's where I closed the trade basically. So nice, perfect move, and that's all you need, right? I didn't try to push it because I'd be facing this pullback, and then we have questions on what do we do here? Do we partial, and do we trail it here and potentially get stopped? All those things come into play. So that's why you take a reasonable target that is in reach of the move, and you just be happy with it, right? So we have engineered liquidity. We have a breakout that failed at our level, came back under the 8-hour candle high and previous day high. So now we know we're bearish, and it's breaking back under the 20 EMA. So all things aligned, and I entered short right there on that candle and rode it all the way down. And we know that these traders that are up here on this breakout are now trapped. Let me see if it'll let me. Yep. So this is the nice oil trade for today. You can see that I marked out the engineered liquidity. This is our failed breakout level, right? The last higher high that was taken. And if price gets back under that, now it becomes a failed breakout level. I've mentioned it a few times. That is pretty much our gauge. If price can't get back above, then it's a confirmed failed breakout, and it's going to continue lower. I marked out the 8-hour breakout. So this one is from London breaking out, and then this breakout was this candle, this initial pump higher. And then I marked out the failed breakout. So it came back in the range. We're back under previous day high. As you can see, I marked out the accumulation range. This pump up was manipulation, and we should get a distribution taking out that engineered liquidity. Just a beautiful setup. And this is the last internal low, right, before it made that higher high. So this is our death line. If not only do we get back under the breakout level and all the levels that are there and the 20 EMA, we have an anchored VWAP that we're now back under. If we start breaking down, you know it's going to come down. So that is entry right there on that candle. You can see I marked it out with the projection tool. Right there on that candle close, boom, entered, and you let it roll to take out liquidity. And as you can see, that's where I closed the trade as it was taking this liquidity right here. I didn't try to, you know, hit a home run or run for the fences. You know what I'm saying? You got to take the trade when it's available. You could have partialed there and then left the trade open for the rest of the day and kind of see where it goes. But I'm pretty happy with that setup. It was very beautiful, so I would just close it there. So that's the oil trade. Everything aligned perfectly with the indicators, made it really nice and easy to spot, and you can get into that type of trade. Now let's look at MNQ. As you can see, I didn't take the long, but I did take the short setup. So similar to the setup that we traded yesterday in Asia, had a very similar smaller type setup, right? So as you can see, we broke out of this 8-hour block here. This is London. It broke out and then it started to fail, right? Leading into 8:30 news. So if it wasn't 8:30 news, I wouldn't be taking this. I'd be waiting for the long setup, right? But knowing that there's 8:30 news here, PPI, we have a short setup. So very, very similar. We got this higher high that failed, right? Price made a new higher high. So now that is our breakout level. So all these traders are trapped. These longs are trapped. Came back, pushed back up. These longs are now trapped, not letting these guys out. Came back. Now this is the 11 o'clock. The 8 o'clock candle open, the hourly open. So if you know you're getting an open high, lows, close structure, you're going to get another manipulation move higher. So it pumped up and trapped and induced another set of longs and immediately put them underwater. So now you know if we start breaking down from this breakout level, this low right here would be considered the death line. So you get back under that, you know it's coming down. However, entry is up here. You wouldn't necessarily wait for this. It's just, you know, when you enter, you're watching that level and you want it to break down from there, right? It's breaking down from the EMAs. It failed to even get above previous day high, right? So a lot of confluences here, and the indicator is showing you this is a bearish level. This is where you're going to look for setups, right? This is a bearish zone. So if you see rejections here, it is more than likely going to come to the next level, which is the hold flip zone right there, the 3 lines. That is where you're going to short to, right? And you're not going to try and swing for the fences and go, because these things like this can happen. You get a failure swing of low of day and then it turns around. So if you had your terminus here, it would have never hit, and now you're out break even if you didn't partial or close, right? I closed the trade here. My TP was the hold flip zone. That was a trade setup that I was taking, and it was a few points away. When I'm in that scenario, I know it's more than likely going to hit. However, I'm not trying to face any pullbacks because NQ can really jam it back up very high and try to knock people out break even before coming back down. You just don't know how high that lower high is going to be, right? So I don't want to be in that. I'm so close to terminus, I'm just closing it, right? We also had bearish high time frame swings. So this is the NQ trade. We also had a bearish high higher time frame swing. So we got the 12-minute making a nice bearish swing right on that 8 o'clock opening candle, leading into the PPI news. And then we had an hourly bearish swing here. So we should get, and we had an hourly inside bar right there as another piece of confluence as protection for a stop, knowing that if we break down, it's going to come down to our targets, right? Nice breaking down structure. So it's pumping, making new highs. So it made a higher low, which is expected, and then it comes up to make a lower high. Now you're paying attention. Alarms should start going off here. It is doing something odd. If it makes a lower low, this lower high is confirmed now, right? And then it made a new lower high. So you're waiting for that 8 o'clock candle that's about to open. It's if it's bearish and you have bearish bias, it should be open high, meaning it should have that move higher, meaning you're waiting for another lower high, right? So you wait for that inducement and you want a rejection. So as you can see right there on the inducement, it immediately rejected. I entered on the very next candle and it's starting to break the 20 EMA right there, back underneath. This is a failing structure. If it continues to fail with news, it's going to get back below the previous 8-hour candle, which is Asia, and should hit our hold flip zone down below with the indicator. So I marked out this liquidity. Not that I was targeting that. I was targeting a little bit lower with the hold flip zone, but I was eyeing this. And as soon as it came down and swiped that, I pulled my stop very tight, and it was either going to push a little bit lower or pop up and take me out, but I was happy with the trade anyway. Very good setup for the short. And then you want to wait on the flip side, right? If you're bullish, you're waiting on the flip side for this to happen, and you're watching the hold flip zone, because that is the decision point of if price is going to continue lower. It's going to have to break through convincingly, and you would want to see it take out low of day. Or if it fails to take low of day, and ES did take low of day, right? That's a bullish SMT right there. This is a failure swing. So with failure swings, opposing liquidity is in jeopardy. So you know at the hold flip zone, these things have occurred. Now you have confluence, so you're waiting for a displacement back out of this level. This first displacement candle right here, it's lit up purple, so you know, and it's green, meaning it closed above the 20 EMA. So that is your entry, or you can wait for a pullback into that if you want to. Sometimes it goes without pulling back, so I typically enter on the candle close. I don't wait for the pullback, and I just put my stop there at the bottom of the candle. And I know that it may pull back, so you're not scared of that, and then it should distribute higher and take out the highs, right? You can also take it to this level or partial here, right? And then leave a TP at previous day high, or the next silver lining level, which is pretty close to where it is now. It may be hitting that, but you have a bunch of levels, and the indicators just really help you identify where to look, right? Where are these things going to happen? If it's pumping down, let me go ahead and turn off silver lining, for example. If it's pumping down like this, you don't know where it's going to stop, right? It is at previous day EQ, which is a known natural support for it to continue higher, but you're going to be waiting on low of day, right? It's so close. You're probably waiting for that to get hit, or you're extremely bearish and you're jumping into shorts here, right? When you turn on the indicators, just silver lining in particular, on this example, you can see you have the hold flip zone right there. So now you know to be watching this, and you have accumulation, right? So for the long side, let's go ahead and mark this out. This is the failed breakout level, right? Or I should say breakdown level, because it broke down and then came back up. If you're bearish, you want price to stay underneath that. If you're bullish, you want price to stay above this level. And this would be your death line. That is the last lower high that needs to hold. If it breaks, then they are going to punch it up to the other side. So nice things happen today. Very clean trades, very clean setups. Beautiful trades today, as you can see with the execution.
Connection lost.
Sorry, my Ninja Trader, I guess, disconnected. But you can see with the annotations and the executions, I'm not going to show you guys something with just a projection tool saying, oh, I took this, and then slap on a trade tool and just be like, yeah, I took this, believe me. You know what I'm saying? I'm going to show you the executions with the thought process, right? As you can, like I said, it was breaking down the 20 EMA. So this was the 8-hour inducement, 8 o'clock inducement. The next candle rejected. The next candle came under the 20 EMA, right at the level that we're looking for. The bearish structure is there. And that is exactly where my entry is, right? And then I added, once it confirmed to start breaking down, I added to the position and I let it roll to the target. But not too many people will show you the annotations plus their indicators plus their executions on those trade setups. They're not showing you all the things, right? They like to hide the things because their entries or whatever might be messy. And there's nothing wrong with that, right? If you enter in a bad spot, or if you enter in and the delivery is bad and you have to stop it, break even, and then enter again, and now it looks a little ugly, that's okay. There's nothing wrong with that. You know, sometimes that happens to me as well, right? I'll enter in and then it runs like 50 points and then it pulls back violently just to where my break even was, and then it starts to continue in my direction. So if I get taken out break even, I might re-enter if the setup is still valid, right? But people won't show you their executions. It's rare for someone to actually show you where they're entering and where they're exiting in a clean fashion with the logic and annotations and everything, right? So this is why I always tell people, you know, send the charts with the exit. I don't care about P&L. It doesn't matter how much money was made. If you ask me, oh, how much money did you make on that trade? I'm going to tell you it's irrelevant. Doesn't matter. Does not matter, because the reason why is someone could be trading with a 50K account and someone could be trading with a 150K account. And there's going to be two, they could have taken the same exact setup, same entry, same exit, but they're going to be trading different sizes, right? So the person that made much more with the bigger account because they can put bigger contract sizing, are you going to say that their trade was better just because they made more money? No, it's the same exact setup, same exact execution, and that's all that matters, right? Because if you consistently get the process, if you can consistently see what's going on and make it systematic and mechanical, and you're waiting for these things to occur on the chart and you're taking those setups, right? Eventually your account is going to grow. And when it grows, you can put more sizing down and you'll make more money. So the P&L is a variable. It will change with the amount of contracts that you put on. The setup and the process stays the same, right? So I don't care about P&L. I'm not going to really show you guys the P&L. I'm not into that. And I try to tell people, yeah, you can post the P&Ls. That's great. We can celebrate the wins, right? But I'd rather you post the charts with executions so we can see exactly what's going on. We can see what you did perfectly right or what you did a little bit wrong, and we can adjust and dial in those things, right? Make those small adjustments to make the trading better for you. And that's all that matters. The P&L behind it does not matter, right? Because that, like I said, it's a variable. I don't have to repeat that, but that should make sense, right? So that's why I like to show you guys the annotations with executions, so it all makes sense and you can see exactly where I entered and why, right? So just remember, a lot of people won't show you those things. And, you know, this is what's going to help you study or understand what's going on and why you should enter and what to go for and what to look for and things like that, right? You want to develop as a trader, and everybody trades differently. I'm not saying, you know, like a scalper is going to be different than someone that's looking for bigger expansions, right? So their trade setups are going to look a little bit different, you know. A scalper, for example, would have entered in here and took this liquidity, the first one, because they're jumping in a little bit heavier. Nothing wrong with that. Perfect. You know what I mean? It's just the trade setup, right? That we need to go after, the logic. But anyways, I'll end it there. Perfect day. I'll put the link in the Discord in the description if you have any questions or comments. And again, I am making lifetime access very affordable for the indicators, the schematics, and you can always ask questions 24/7. And it's just a place for traders, right? You come together. I don't specifically say this is the system that you're gonna trade, right? No matter what you trade, we're gonna dial that in. It's all discipline. Every strategy is going to work. It all depends on what works for you, what you can understand the most. But the only thing is, you need the discipline to make that strategy work. You need to know when it works and when it's going to fail. What is the environment that is best suited for the strategy that you're using, right? We can't say one strategy is better than the other. They all work. Someone could do way better with a simple inversion entry than someone with a more complex system, right? It all depends on the trader, the discipline, and those are the things that I like to harp on and drive, because that's what's going to make you a better trader no matter how you're trading. And then when you ask questions, no matter the strategy, we can dial it in on perfect, maybe not perfect, but near perfect entries and stop placements and things of that nature. So again, if you want to join the Discord, you're very welcome to. And if you like the indicators, it's a lot of colors and it's a lot of things on the chart, but it's all geared to tell you a lot of information on what the market is doing, right? I don't care if someone says, oh, your chart is so colorful and blah blah blah. I don't care. It's telling me everything I need to know in that moment, so it's less thinking and more mechanical. This is the setup. This is the structure that I'm looking for. I need to take it. So I'll leave it there. You guys have a good one. Great trading day, and we will see what happens tomorrow.